मरघट तक है तेरी कहानी पग पग प्यारे दंगल 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 सूरज तेरा चढ़ता ढलता गर्दिश में करते हैं तारे दंगल 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 दंगल.
Great morning, my dear friends. Bhupesh Anand this side again. So today we'll be starting with a new reading, and the name of the reading is Equity Valuation Concepts and Tools. And I have given 5 stars to this reading. The most testable, highly testable for your examination, specifically for CFA level number 1. So we are going to start with the most important study, and in this we will be covering 13 learning outcomes, and most probably I will be delivering 14 or 15 lectures. So please check out your registers. Please, we have to write down so many concepts, in this. So let's start with the journey. And before starting with the journey, I just want to tell you one example, that in case you know how to drive a car, and you have learned how to drive a car from a driving school, then two components are important in that. The first component is you should know the skill, the knowledge, and the second is the practice. It means you should know what is how many gears are there, what is this speed accelerator, how you can use brakes, how you will be using brake, how you will be using rear mirror, and all those knowledge you should be aware of. But only with the help of knowledge you cannot learn how to drive a car. For that you have to do the practice. It means when we mix practice as well as the knowledge, then only you can get anything. So similar is the example with this. In equity valuation models, in equity valuation concepts, I will be telling you so many different knowledge skills, but in order to have a better hand in this, you have to do some practice, because this is most important reading we will be doing with 13 learning outcomes. And the same example is in case of swimming. In case you want to learn how to swim, there are two points which are important. One is the skill, and second is the practice. How much practice you are doing, how you are inhaling, breathing and all that. So let's start with the journey. And there are 13 learning outcomes. No doubt I have written some learning outcomes that I will be discussing this, I will be discussing this, I will be discussing this. For example, in learning outcome number A, which are no doubt given to you in CFA curriculum level number 1, I will be finding out, in case market price is given to you, then whether with the help of market price you have to find out whether the security, whether the equity is overvalued, whether it is undervalued, or whether it is fair valued. So fair value, undervalue, overvalue can be calculated with the help of, we will be doing in learning outcome A. But the point is, in the lectures I will be shuffling some learning outcomes. No doubt I will be covering all, but I will be shuffling. On the basis of that you will be better understanding all the concepts. So I will not be firstly doing how to calculate whether it is fair value or undervalue or overvalue. Firstly I will be doing learning outcome number B, that is what are the different methods of valuation, how we can value, what are the different methods with the help of which we can value the equity. So let's start with the journey. Today we'll be starting with major categories of the equity valuation models. Then we will be doing all 13 learning outcomes, that is what is regular dividend and all that. So the first point which you have to write down is, I'm going to start with learning outcome number B, and I will be telling you something about the methods, that how many methods are there. My dear friends, there are 4 methods. So let's prepare a flow chart, because this is a summary of the whole curriculum, and in case you have prepared this slides, it will be very helpful while solving the examination questions, even CFA practical problems. So first point is, what is a value? Now there is a difference between a price and a value. Price is different and value is different. Okay, value is the how much benefit we are getting by buying that. For example, if I am purchasing this highlighter, then the price can be 20 rupees, but the benefit which I will be getting from this highlighter, that can be different. So that is named as a value. Value is different from price. These are the two different concepts. So we are doing equity valuation, that in case I have purchased this share, in case I have purchased this security, then how much will be the benefit I will be getting. So the whole concept revolves around benefits. So there are four methods. There are four methods to value a security, equity security, and the first method is most important, and that is named as discounted cash flow. Discounted cash flow method. So please prepare a diagram. Please prepare a flow chart. Discounted cash flow. Second is comparable method, relative valuation. If I compare this company with this company, Infosys with TCS with Wipro with another IT company. It means I am comparing Thomas Cook with Caesar Rebels. It means I am comparing the companies and then I am valuing it. It is named as relative valuation. In this, we will be comparing the components of the company. For example, price to earning ratio, price to sales ratio, price to EBITDA ratio, or there are so many other concepts which we will be starting with in this comparable or relative valuation. The third method is asset-based valuation. So my dear friends, four methods are there. First is discounted, second is relative or comparative, and third is asset-based valuation, and the last is others method. When I say others, it means because this valuation field is an art, it is not a science. It is somewhat art and somewhat science. In case if I want to say to analysts that please value this particular asset, they will have a different valuation. No doubt the asset is same, but they no doubt the formulas are same, but they have different types of valuation because it is a it is a more of a art. So other different methods are evaluating nowadays, and those methods, for example, equity option valuation models. With the help of options also, we can value the equity, that whether it is a case of option. For example, in case of steel producers, that we will be discussing in that. First point, I think you must have written that. Second point, I'm going to start with is named as discounted cash flow. Discounted cash flow method. When I say discounted cash flow, we have already covered in corporate finance, we have covered in fixed income, but still I'm going to start with discounted cash flow. When I say discounted cash flow, as the name indicates, that I am getting future cash flows and I am discounting those. I am discounting those cash flows, and that method which discount those cash flows is named as discounted cash flow method. So the main concept in this is the value of a security is present value factor into cash flows. Now we know that how to calculate present value factor, but the most important point is how to calculate the cash flow. Now again, cash flow can be calculated by three methods. One is dividend discount model, second is free cash flow to firm, and third is free cash flow to equity. Most important concept. So please write down second point. As per this, value of stock is total of present value of future cash flows, present value factor into cash flow, and there are two components. So how to calculate cash flow? We'll be doing separate lectures for calculating cash flows as per dividend discount model. And cash flow can be for a firm and cash flow can also be for a equity. So we will be doing three methods for calculating cash flows. Please write down this flow chart. Method 1, dividend discount model. Method 2, free cash flow to firm. Method 3, free cash flow to equity. Corporate. And the next method which we have, because there are four methods, the next method is comparative or relative valuation. When I am valuing X by comparing it with other, that is named as relative valuation or comparable method. For example, I am valuing a company Book My Show with a different company in the same business, that, and then I will say I am comparing it. I am using the method named as comparable method and then calculating the value. So comparable slash relative valuation method. Following is the list of different methodologies in comparable or relative valuation method. I am comparing two components, and on the basis of two components, I will be finding out the value. And the first is price to equity. Price to equity or price to E ratio, that is market price upon earning price. Second is price to sales, market price upon sales. Third is market price upon cash flow. It means I am comparing two components of a same firm, and on the basis of that I am calculating it. That is named as relative valuation method. We'll be doing all these methods. We'll be doing the practical example for that. Enterprise value upon EBITDA, earning before interest, tax, and depreciation and amortization. And last is price upon number of registered users, because in some cases we cannot calculate sales because those models are different models. Those are different business models. For example, in case of Book My Show, in case of WhatsApp, I cannot calculate the value as per comparable method because the revenue is not there. Now, in that case, I will be calculating the value of those models on the basis of number of registered users. Supposingly there are 10 lakh users of WhatsApp or 1 lakh users of Book My Show, and I value that rupee 5 or the $5 as a value for one user. Let it be like this. So I can calculate 1 lakh into 5, that is $5 lakh or 5 lakh million. This will be the amount which I will be calculating for you, and that is the value of the same. Next is asset based valuation. Asset-based valuation. There are four models. First model is, I repeat, is discounted cash flow. The second model is comparable or relative method. The third model is asset-based valuation, that how many assets are there for a firm. And assets can be, we can calculate the value of assets either on the basis of book value or on the basis of market value. Now, how to calculate book value and market value, we'll be doing in detail. Uh, we will be doing in detail. And the last method which I have not just discussed, that is named as other method. Now that is option valuation methods. That depends upon the binary. Sometimes if we get the permission for something, if an industry get the permission of something, then the value will be different, and if there is no permission from the government, the value will be different. It can be in case of steel producers, because that industry is facing problem nowadays. And if all steel manufacturers goes and have a presentation before the government, and that this government should do this and now there are two options, whether the government will do this or whether it will not do this. It means if they will do this, the value will be different, and if they do not do that, the value will be different. So it is a binary type of system, option valuation. So that we will be doing in CFA level number 2. In CFA level number 1, I will be basically focusing on these three methods. The first method is DCF, the second method is comparable, and the third method is asset based. Within DCF, I have two components, and the most important component is cash flow. Now we will be learning in the next lecture that how to calculate that cash flow, what are the different methods and what is the logic behind that. Be happy.